Welcome to another episode of Stately Investing with your host, Burnett King. If you like the content I'm putting out there, give us a thumbs up. If you love the content I'm putting out there, give us a subscribe. It really helps the channel. If you have any questions, feel free to leave them in the comments section or send me an email at statelyinvesting@gmail.com. And let's get started with the show. All right, everybody, we have a lot to cover today. We're going to talk about, is the stock market delusional, right? So is the stock market actually responding to the economic factors that are going on around it? You'll get my opinion on that a little later in the video. First, I wanted to talk to you guys about subscribing and liking and commenting and all that. It really helps out the channel, so I hope you can do it. But also, I wanted to show you guys my new Twitter account. So I started an account on Twitter. It's at InvestStately. That's the home of Stately Investing, and hopefully you guys can reach out to me there, see what I'm tweeting. You can always get links to the videos there. But yeah, I wanted you guys to check it out. Hopefully you will share it with your friends. Remember, you can always comment there, comment in the videos, or email me directly at statelyinvesting@gmail.com. And with that, we will get started. So first we're going to talk about, is the stock market delusional, right? And the reason I use delusional is because it's not matching what is going on in the economy, right? So stock prices are rising, the market is looking good, we're back to the green in a lot of cases, and it seems like it doesn't match up with what's actually going on in the US, and we're talking the US stock market here. So first of all, maybe it's not delusional, right? We got the jobs report this week, and it looked a lot better than economists were predicting. There was a lot less filings for unemployment benefits this week than expected. And you can see an article here in Seeking Alpha around America's unemployment is falling already, right? So maybe we're in a recovery mode. Maybe the dip was short-lived and we're back on track. So this article talks about, is the economy bad right now? Sure, it is, but there are a lot of factors that are boosting the stock market right now. So we have the Treasury, the Fed putting in a lot of economic boost factors, unemployment benefits, just essentially printing a lot of money. And then also it seems like the unemployment might have been temporary, right? So are people getting back to their jobs in a rate that is higher than we expected? Maybe so. And all this might be the reason why the stock market keeps going up. Now, in my opinion, I think we just haven't hit the trailing effects yet of the virus and the dip. And what you'll see is that even though we might be recovering from the coronavirus effects on the market, I still think unemployment will have a bigger impact overall on the economy. And right now, because of that boost from the Fed, we're not really seeing that effect on the market yet, where people's spending has not significantly decreased. I mean, people's savings rate has gone up and spending has decreased a little, but overall, you haven't seen the big effect that you think you would with these levels of overall unemployment. So we want to check out a couple other articles on this issue. So this one, again, Seeking Alpha, don't get too comfortable. The next wave is coming. As it says here, participants have been really complacent, but there are all these other things going on. So reopenings, you have riots going on in the U.S. and protests. There's a lot of political unrest in the U.S. right now. There's a potential for a second wave of the coronavirus, right? It's not cured yet. There's no vaccine yet, and it could come back. Additionally, all of the money that the Fed is pumping in right now that is kind of artificially boosting things, eventually that will stop, right? And eventually you will see that kind of boost effect go away. And what happens when that goes away? Well, we might have some issues, right? So this article really sums up a lot of what I think, in my opinion. So I'm gonna link this one in the below the video. You guys can check it out. But you can see it goes into a lot of details. So what's the Fed doing? What can they do when there's a drop? Those kind of things. I was looking around. You can also check out this video from my video last week on REITs and are they risky? This article talks about which REITs they would not touch, basically, and it's just a insight there on REITs and the real estate market in particular. So this article was also interesting, talking about, the unemployment rate is actually higher than reported, right? So we saw that uh, unemployment has gone down, or not gone down, but people have been filing less than the peak about a few weeks ago. And so the true unemployment rate, however, does not really reflect those unemployment filings each week. And so we have to think about the overall rate. So keep that in mind. And then this one is unemployment is better than expected, but bankruptcies are still to come, right? So companies are still overall potentially going to go bankrupt, especially smaller companies that don't have the cash resources, that aren't being boosted by these treasury programs. So overall, I think there's more cautious sentiment than the markets would actually have you to believe. And so while things are going up, you want to make sure that you are prepared in case things go back down. I think this article, I also linked to this one. This was one of my favorites, is 5 reasons the market is rising while unemployment is skyrocketing. So it goes into a lot of details around the confusion of why things are going up. And it gives 5 specific reasons. So maybe the job losses are temporary. We talked about that at the beginning, right? Maybe people are getting back to work quicker than we expected. And a lot of these were more almost like furloughs than true layoffs. The second one is the market is forward looking, right? So stock prices tend to bake in what they think will happen in the future. And again, people thought this virus would be a blip. It seemed to last longer than people expected, right? If you go back to my coronavirus video, I'll put a link up top. You can see where I thought this would be a temporary thing and that it would be a fairly like quick dip, and then we come back up pretty quickly. I think, as this has stretched on, my view on it has changed a little bit, but I would still invest, right? I'm still investing every month, keeping money in the market, adding money to the market. So I don't think overall we're going to, just eliminate people's income if you're investing in the stock market, but you want to invest periodically so that you're not always putting in a ton of money at the peak and going to lose a ton. The third reason here is interest rates, right? So interest rates being low is always a boon for stocks, and interest rates are at rock bottom right now. I think that's one of the things that the Fed has done to really boost the economy, is really keep those interest rates low. Again, we talked about the massive government action and what Congress has passed, 2.3 million in the CARES Act, right? And again, my question is what happens when that kind of dries up and goes away? And then remember that the index, right, S&P, is made up of a lot of tech companies. And so tech companies are not as affected by some of these viruses and other events, these kind of events that are going on that would affect their stock price or affect their business model. And so some of the biggest companies aren't really seeing the effects like other companies. So overall, I think you guys can make your own decision around whether or not you think the market is delusional. Personally, I think you should be cautious, but not stop investing, right? Periodic investing and dollar cost averaging works out in the long run. We've seen it historically time and again, even through bad times and down markets. And so even if we see this kind of bullwhip effect where the economy tanks after all of this spending and investment by the Fed goes away, and the unemployment numbers look really bad again, I think you should still be investing, and I think you should just be prepared and be smart about it. So with that, we'll move on to how my portfolio is doing. It's time for kind of the monthly review. We'll look at that and see how I'm actually performing. All right, so let's look at my portfolio. So you can see we are up almost 10%. Could you guys imagine it, right? We're at $15,734. And, back here we were down 30% just a few months ago, right? Literally like 3 months ago. We were down quite significantly, and you can see the stock market just kind of taken off since then. Particularly the stocks that I own have been good investments. You can see a lot of my gain is in market gain, but a big chunk of that is also in earned dividends. So that's always exciting to see. I think overall I've had a pretty good run since the bottom here, and it's actually been growing faster than you can see my kind of linear rate here versus my more like a steeper increase here. So let's look at the week. For the week, I was up almost 6%. Again, a lot of market gains this week. A lot of that, boost, that move back to green has come in the last week or two. Overall, I've gotten a lot of earned dividends as well, which is good to see. And then we can look at the month as well. So the month has been great. Again, this whole month has been pretty dramatic, as far as the sheer increase at 11.5% in earned dividends. Why don't we go into my activity for the month so you guys can actually see my dividends here. All right, so we have May in here, and you can see the dividends and the buys, right? So you can see that's mostly what I've been doing, is just letting my money work for itself, right? That's the whole point of dividend growth investing. Remember, you want to kind of pick good companies, make sure they have growing dividends, and let the money roll in, right? That's the point. And you can see overall I've had some significant dividends, and also I just continue to invest every month, right? So $500 bi-weekly. I haven't put in any additional money currently, at least not into this account. And so I think you can see the buys here, right? We talked about this one a little bit last week, so I'm not going to go into it again. So let's jump over to my monthly spreadsheet and see the numbers for the month, and you can see the dividends in a better visual. All right, so you can see for the month, we are looking back at the month of May. Again, I put in $1,000 this past month. Market gain of around 275.74, so that doesn't account for that first week of June that I was just showing you earlier in the video. But overall dividend payouts were at $28 for the month. A gain of around 9.26, a ratio of dividends to market gain, which is pretty nice, right? To see that your dividends are going up even if the market isn't going up as much. And then overall, month over month growth is actually down, right? Last month I had a great month for dividends, but you can see that it's pretty much in line with the average, right? So I look at the trailing 6 months for my average right now, and $28 lines up pretty closely with that amount. So overall, I think I'm happy with the dividend payouts that I got in the month. You can see from the bar chart here that it's down, but overall this trend line is going up, and that's what you want to see, right? Just slowly but surely this is growing the account, and hopefully in June we'll have even a better month. It might be that April is like my peak month every year. We'll see as we get towards September, then we'll have a year's worth of data. But overall, I'm happy with where I am. So hopefully you guys enjoyed this video. I think, again, be cautious out there with your investing. Keep investing periodically. I would say that's my biggest piece of advice for the week, is just, if you're investing, don't try to do it in huge chunks if you can avoid it, because you never know what's going to go up or down right now in this crazy time that we're in. Just keep dollar cost averaging in, and you will grow your portfolio over the long haul. So again, remember to hit me up on Twitter. It's Invest Stately, or you can email me, leave a comment, all that great stuff. Feel free to like and subscribe. I appreciate all of you out there, and hope you have a good week.